Welcome to FYI, the Four-Year Innovation Podcast. This show offers an intellectual discussion on technologically enabled disruption, because investing in innovation starts with understanding it. To learn more, visit arc-invest.com.
ARK Invest is a registered investment advisor focused on investing in disruptive innovation. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. It does not constitute, either explicitly or implicitly, any provision of services or products by ARK. All statements made regarding companies or securities are strictly beliefs and points of view held by ARK or podcast guests and are not endorsements or recommendations by ARK to buy, sell, or hold any security. Clients of ARK Investment Management may maintain positions in the securities discussed in this podcast.
Bitcoin is a relatively new asset class, and the market for Bitcoin is subject to rapid changes and uncertainty. Bitcoin is largely unregulated, and Bitcoin investments may be more susceptible to fraud and manipulation than more regulated investments. Bitcoin is subject to unique and substantial risks, including significant price volatility, lack of liquidity, and theft. Bitcoin is subject to rapid price swings, including as a result of actions and statements by influencers and the media, changes in the supply and demand of Bitcoin, and other factors. There is no assurance that Bitcoin will maintain its value over the long term. ARK strongly encourages any investor considering an investment in Bitcoin or any other digital asset to consult with a financial professional before investing. All statements made regarding Bitcoin are strictly beliefs and points of view held by ARK and/or podcast guests and are not recommendations by ARK to buy, sell, or hold Bitcoin. Historical results are not indications of future results.
All right, welcome back to the Bitcoin Brainstorm. I'm your host, Rod Rudy, co-founder of Bitcoin Park, a community-supported campus right here in Nashville, Tennessee, focused on grassroots freedom tech adoption and a home for Bitcoiners to work, learn, collaborate, and build. We are now on episode number 15, the last episode of 2024. And thanks again to the support from Cathie, Yassine, and the entire ARK team. We've been taking our monthly Bitcoin topic-based approach at Bitcoin Park and applying it to this monthly podcast series, Bitcoin Brainstorm. So each month we've been covering a range of topics and inviting amazing people from a variety of areas within the Bitcoin community, especially if you've been listening for the first time here. Our aim is simple. Let's drive conversation around Bitcoin. And we are now here today, especially with the renewed exuberance around quantum computing, to discuss whether this is a material threat to Bitcoin in the near term, what is being done to quantum-proof Bitcoin, and much more. We even took some time to highlight some of the milestones and accomplishments in 2024 with a look to what's to come in 2025. So joining Cathie and I for this brainstorm was Adam Back, CEO of Blockstream. Adam's actually a renowned cryptographer and one of the earliest pioneers in Bitcoin. He's actually cited in the Bitcoin whitepaper for his invention of Hashcash, a proof-of-work system foundational to Bitcoin's design. Back has been deeply involved in cryptography and decentralized technologies for over 3 decades. Also joining us was Matt Corallo with Spiral. Matt's a prominent Bitcoin developer and open source advocate who's contributed significantly to Bitcoin's core infrastructure. Also, Frank Downing, Director of Research at ARK Invest. Frank's been focused on disruptive innovation in the fields of blockchain and AI, so added a lot of value to the brainstorm. And then last but not least, my friend and co-founder of Bitcoin Park, Matt Odell. Matt's a prominent Bitcoin advocate, educator, and host of one of the top Bitcoin podcasts in the world. He's known for promoting privacy and self-sovereignty within the Bitcoin ecosystem and is now working as a managing partner at the VC firm 1031. So I hope you all enjoy this episode as much as we did, and we'll see you in 2025. So Cathie, let me just actually pass it to you around this topic of quantum computing. What's on your mind right now?
What's on my mind? Well, I've been in the business generally for more than 40 years and very focused always on technology. And for the last 40-ish years, quantum computing has always been 20 years away. Right? And we really hadn't seen much progress at all. And so, I've been skeptical of anyone who proposes that it's about to transform anything. But I will say AI has been a wake-up call from this point of view. AI has been around I mean, it's certainly been in science fiction, but, they've been working on it for 50, 60 years plus. But recently, the breakthroughs have been so dramatic. Transformer architecture and so forth, generative AI, that it is, slowly, then all at once. And so I just want to make sure that we're thinking about this correctly. I don't want to dismiss any possibilities because I do think technologies are moving ahead faster and faster. And I would love to know from these esteemed experts on technology, blockchain technology in particular, Bitcoin in particular, do they see any risks? Because they're working deeply in are right in the thick of it, and I'm sure are worried, and I know they're worried all the time about what could go wrong. That's why Bitcoin is the most secure network out there. So
Totally. Maybe we start with Adam, and I know Matt is Blue Matt is one of the most skeptical people out there, so he's good from an adversarial thinking perspective. But I know Adam, you've been reply guying a lot of folks in terms of where we are right now. You like that, Odell, the reply guy? Thank you.
Well, I think actually, if you read there's a particular quantum press release that is, and this happens from every some number of months, that there's some press release to do with quantum, and then the Bitcoin FUD fires up how Bitcoin's dead because quantum is here, and of course it's always probably a decade or two premature for actually being practical, but this particular one is Google Willow. And if you read the actual Google Willow material, it's fairly well balanced. It caveats that they're pretty early. You can't really use it for anything practical yet, but they think it's, an architectural improvement in error correction and a few things. There's a lot of technology that has to come together and get scaled massively from where things are now until it works. And I think one thing that they do is they benchmark some artificial sort of synthetic behavior. And so I was trying to sort of research and ask people who look at quantum algorithms more commonly what the actual performance on relevant things are. So it'd be good to know, not does it have quantum symmetry for something that nobody cares about that doesn't mean anything, but, how big of a number can it factor? And it turns out, I think that other than sort of shortcuts, they have not been able to factor the number 15 yet, which sounds laughable because, children could do that at school and so on. But it's because if you want to use the proper algorithm, you have to do modular exponentiation. And the circuit to do modular exponentiation is too big to fit in any of the quantum computers and they've been around for 26 years. The first one was like 3 bits in 1998, I think. That was the very first physical quantum computer. So they still can't do that, right? So I was thinking, they're talking about 100-bit quantum computers and they're not all comparable. So, well, how many bits can you factor? And I start reading a bunch of stuff. And apparently, basically, unless you cheat and you take shortcuts and you don't do the hard stuff, 0 bits. So we don't even have a cryptographically relevant benchmark yet, right? And Bitcoin doesn't use factoring, but it's something, similar kind of concept in terms of hardness. And they seem to focus more on factoring because it's a sort of simpler problem to work with. But, if they start factoring cryptographically relevant RSA numbers, that's time to start paying attention. So, it's kind of tempting to propose a bet to some of them because they're saying that we should watch out by 2028. Like, no way. So that's where I'm at.
Well, that's where like the rate of improvement discussion becomes important because there's some point in the future where this is a meaningful thing to consider and take action on. We know we're not there yet, but how long will it take to get there? And I'm not a quantum expert, but I've been looking at the estimates for the size of a system needed to do this kind of large number factoring. And depending on whether you're talking about logical qubits or physical qubits, there's a range of several thousand to millions of physical qubits required to do anything that would come close to challenge modern cryptography. And where we are now, at least from Google's perspective, is going roughly from 50 qubits to 100 qubits over the last 5 years. So even if they double the number of qubits every year for the next 14 years, you're just in the single digit thousands. And that's a 14, 15-year time period before it's close to possible. And so and that's doubling versus doubling over 5 years, doubling every year. So maybe there's a dramatic acceleration that will happen, but it's not the trajectory so far.
Yeah, actually, I tried to calculate it, which was to go from the number 3 in 1998 to where they are now. And it came out with a kind of a power distribution increasing by 16% a year to get to like the hundreds now. And if you project that forward to get to a big enough quantum computer to be cryptographically relevant, it would be in another 50 years. And, of course, that doesn't mean that's what happens. That's just curious to see what the actual numbers say, because as Cathie said, people have been looking at this for a few decades. They've been seeing sort of indistinguishable things year after year, and the rate of progress has actually been like relatively modest in terms of bits, right? It hasn't been doubling annually or anything close to it.
Have you looked at maybe the rate of gain was extremely slow in the earlier years and it has come up? Is there any way to tell that?
I mean, I think there are lots of building blocks. They need to come together to get it to work, and they keep changing, hitting limits and changing the physical experiment they're using to get to a certain number of bits. And it's also not simply scalable, right? So you can't just take 205-bit chips and run a wire between them and expect it to be 210 bits, because it doesn't work that way, right? You've got to have all the bits entangled. So I think they're working on, 5 or 6 different major building blocks about ways to connect them that do preserve some quantum effects and coherence time, how long they stay entangled, so that you can use them. And it's really a really short time, a few milliseconds or something, right? So you've got to squeeze your computation into that, and then they lose it. And then there's a clock rate as well, which is slow, and they can't do many gates or many bits. So they've got to improve by, many orders of magnitude each of those things, and then bring it together in a working system. So, I think in classical computer terms, they're kind of tinkering around with the first transistor and trying to, make an optical link work or something, right? It's very early physical experiments by comparison, I think.
Yeah, I don't think it's entirely fair to just say that they haven't been scaling up much on the factoring side. I mean, they don't usually use that as an actual test. Obviously the big breakthrough a few years ago, which was a substantial breakthrough, up until a few years ago, it looked like every qubit you add to a quantum computer, you need more than one additional qubit to compensate for the extra noise you get. And so it seemed like, okay, well, you can add more qubits, but like this isn't useful. This is not scaling at all. The noise seems fundamental. And a lot of people even wrote quantum off entirely on the basis of that noise. Google, as of a few years ago, and now with this work, is kind of showing that maybe that limit is not fundamental and that they can actually improve it. And they're showing finally that, well, we can add a new qubit and need less than one additional qubit to compensate for the noise. Now, there's still a lot of noise and they still have to add a lot, but they do get some sublinear scaling there. Now, like Adam was saying, there's a lot of other issues, and they still can't add very many qubits before the thing starts to fall apart. And also importantly, they can't keep the qubits going for very long. In order to factor things, in order to reverse a private key, find the private key from an ECDSA public key, or factor a number, you have to keep the system going for quite a while, doubly so for ECDSA, and they aren't at that point yet. So it does seem like some breakthroughs have happened, but the number of breakthroughs remaining to get to a point where we would be concerned in the short term is still more than one.
Yeah. So one point I'll make is I'm probably not as nervous right now for maybe, my foreseeable lifetime, but I'm thinking about my kids, right? I am working my butt off so that maybe they can have one Bitcoin each. I have 4 kids, a 6-year-old, a 4-year-old, a 3-year-old, and about to be a 2-year-old. And so in about like 10, 15 years when they get out of this house, you know, and this does come about because I think the NIST is saying everything's got to kind of be quantum proof by the year 2035, which is around that time. So fast forward to that period of time, and let's just say, there is an issue here as it relates to Bitcoin and its security. What is shouldn't we be working on this now, though? Like Adam and Odell and Blue Matt?
I just want to jump in here real quick. I'm definitely not a cryptographer, and a lot of quantum stuff is way over my head. But I personally am just inherently very skeptical of a lot of these claims. As Cathie said, we've been hearing these claims and a lot of hype for a long period of time. Basically, since I got into Bitcoin, I've been hearing stuff about this. There's posts from Satoshi all the way back early days of Bitcoin about it. But I want to flip it a little bit because one of the things, if you were paying attention to quantum and theoretical capabilities and hype, one of the claims that has often been made is that a nation state is going to figure it out in the near future, and that nation state is going to use it quietly in the background to break encryption. And they're not going to tell the rest of the world that. And I would say that I think people do not really appreciate that Bitcoin is actually one of the few things that if it broke, it would be very public if it broke. And it's basically like this. It's this reset where you know that there isn't someone out there with insane capabilities that they're not publicly saying because Bitcoin isn't broken.
Yeah, no, that's a fair point. I mean, that's like what, a $1 trillion bounty right now to break in and hack Bitcoin every single day.
So, Rod, maybe even stepping back another step from the question you asked, for our listeners who probably aren't as, they don't know as much about the technology around Bitcoin and what quantum computing, that the threat is. Maybe we can set that up a little bit so that people understand why this threat surfaces every now and then. And I don't know who's best placed to do that. I don't know, Frank or Matt or Adam.
I could take that maybe. So there's 2 concerns that we have with quantum in Bitcoin. So quantum computers generally can find the private key from a public key. So when you have a cryptographic algorithm, which is used to sign or used to encrypt to a public key, so think of TLS, SSL that you use on the daily web. Think of the way iMessage encrypts messages. All of these use public-private key cryptography. Quantum computers can find the private key from a public key, which is supposed to be private. Bitcoin uses this to sign all the transactions. So whenever you send to an address, the address is basically a public key, and the quantum computer can find the private key to that public key. And then they could use that to steal your money. So that's the most immediate short-term concern that we would have for Bitcoin. The other one is actually the proof of work algorithm. So a quantum computer, if one were to be built that were reasonably fast, which if one were to be built, it seems like they would be reasonably fast, if not that fast. They would be able to find every block. Basically, they would whoever has the fastest quantum computer would be able to mine all of the blocks in Bitcoin. This is bad, obviously. In Bitcoin, we really want a proof of work. We wouldn't really care if quantum computers could find blocks better than traditional computers. It would just mean that miners would have to use quantum computers. But problematically, in Bitcoin, we want it to be the case that you find blocks proportional to your hash rate, right? So if you have more hash rate, you find more blocks. But if you have less hash rate, you still find some blocks. You just don't find as many. In a quantum computing world, whoever has the fastest quantum computer would find all of the blocks. And that would be very problematic. That would reduce the censorship resistance of Bitcoin. That would make Bitcoin very centralized. The first issue is what we were mostly talking about. We were talking about quantum computers really far away, and we can get back to that. But then on the proof of work side, it seems like this is probably not a major issue. We would have to do something, but that thing would probably be to add some additional complexity to the proof of work algorithm that Bitcoin has. And it wouldn't be a big deal. Miners would need to buy new ASICs, which would be problematic, but Bitcoin would survive. It'd be fine. However, we don't know enough. In order to make the decision of how to do that, we would need to have some sense of exactly what the performance characteristics of quantum computers are. And like we talked about, it's too far away to have an idea of what those exact performance characteristics are going to look like. So there's not really a lot we could do to plan for that. But on the signature side, there is a lot more research in how to do post-quantum signing, right? So iMessage, Signal, even now TLS have started using schemes where if a quantum computer were to be built, they couldn't go back and decrypt your old messages. So this is really the concern when cryptographers are focused on shipping post-quantum algorithms. They're really mostly worried about what happens if someone in the future, in 5, 10, 20, 30 years, builds a quantum computer. Can they go back and read your old messages, read your bank information or whatever that you sent over the internet? And they're starting to deploy algorithms that might work. The algorithms are still a little speculative. They're fairly new cryptography, and cryptography fundamentally is based on like hard math puzzles. And every now and again, somebody comes along and says, that math puzzle is actually not that hard. I can solve it. And then all of the cryptography based on that falls apart. Some of the oldest math puzzles that we use for cryptography, we're really quite confident in because they've been around a long time. No one's had any ideas. We're quite confident no one's going to kind of solve them. But some of the post-quantum signature schemes are much newer math problems. And in fact, one class of them was recently solved. And we realized that an entire selection of post-quantum signature schemes were totally insecure. So you have to use both together, and it makes things pretty inefficient. And so things that are worried about long-term attacks have been slowly upgrading. With Bitcoin, we don't have as much of that worry. If somebody can figure out what the private key is to a transaction you signed 5 years ago, it doesn't impact you. You have to, if you still have coins in that address, it would impact you, but it doesn't like necessarily impact you. So we're not as directly concerned about the same class of attacks. But there are, obviously if you have coins that have been sitting there for a decade, and we learn more in a decade, and then in 20 years as a quantum computer, then you might potentially lose funds.
Yeah, I think interesting point is that people will say, well, why doesn't Bitcoin just implement one of these post-quantum signature schemes now just to be safe? And you could do that, but the only schemes we have a lot of confidence and security of are kind of big. Like the signatures on the internet are like a couple of kilobytes, and those are pretty good, but you really, really mustn't reuse keys. And we know people are not good at avoiding reusing keys. And there's this Sphinx Plus one that's more like 40 kilobytes where you can reuse the keys. That's pretty big, right? But, one of the things that Jonas, Nick at Blockstream and I were talking about, and I think Matt was also separately talking about, so we're having a similar idea, was that you could, using the sort of hidden OR branch that comes with Taproot, you could have a second or a third spending condition, which is, if I can spend using an expensive signature that's post-quantum secure, now, I'm not going to do that in the short term because it's expensive, but if I ever need to, I'm prepared, right? So that's something we could start doing without incurring current day costs because we're not using it, right? And then if quantum computers, in a decade or 2, 3, whenever it happens, start to become cryptographically relevant, then
the Schnorr and ECDSA signatures would be deprecated, like there'd be a soft fork or something to prevent you using them after some period, perhaps, details to be worked out. But at least if you need to do that, there's a backup plan, and people know it's coming, so they can start to move to Taproot signature formats with this optional branch in it, right? And in fact, what you could do is, commit a few different key formats and not even implement the soft fork yet. So you could be ready for a future soft fork. Now, of course, you want to make sure that the keys are valid and test them pretty well, because it'd be a bit embarrassing if you'd sort of done a bunch of commitments and you had to start again because the format's incorrect. But, it's also possible, because sometimes people can implement something and it takes a few years for testing and a soft fork. So committing to a few different post-quantum key formats works. Now, the most likely outcome, though, is that, if we do that, and then, it's probably going to be a few decades, and by that time, the research on more compact signatures will have more review, and people will have confidence in a smaller signature. And then presumably that will get soft forked, that will get added, and then we'll never actually use the Winternet or the Lamport, like these big signatures. But still, it's worthwhile, right? And it's good to have, a hash-based key in there, because you can prove things based on it. You could prove things based on these hash-based signatures, or you could probably find a way to, as a one-off proof, that I know the pre-image of this hash, and then I want to introduce a different signature scheme based on it, right? The problem today is if all you've got is all your coins are controlled by public keys, is those become, you can't use them as a proof afterwards, right? So it's good to have an alternate proof lined up, so you've got a keying point to convert from.
Adam, are you starting to do this work? I mean, or has it been underway for a while? And this is much ado about nothing. And I don't mean that technically, but in terms of the community being prepared, you've been thinking about risks like this and have been preparing, not to do the soft work, but doing all of the work that you need to do before a soft fork.
I mean, some initial things, just people talking about it or trying out different things. So Jonas Nick had implemented Winternet signatures using opcat. So we don't have opcat yet for governance, but it's one of the candidate covenant opcodes. So he had to go at implementing Winternet signatures, because one of the thoughts, right? Well, if we do end up with a covenant, is that covenant powerful enough to implement Winternet signatures from scratch without a specific signature opcode? And it turns out, yes, you could implement these Winternet signatures using it. It'll be a bit less efficient, but if it's a kind of generally unused but worst case backup plan, maybe that's enough too, right? So he'd published some code using a patched version of Bitcoin with opcat in it and showed that it worked.
I was just going to add to that. I recently learned in talking to some of the folks who designed Taproot that this was a consideration in the design of Taproot, actually, that the ability to add these kinds of post-quantum public keys to the Taproot, to the branches in the Taproot tree, was a consideration and something they talked about designing. It's actually, as far as I can tell, not something they ever wrote down anywhere. So I went and wrote that down not too long ago, kind of how to use that, and how we should be thinking about using that. The Bitcoin development community should be thinking about using that. How wallets should be thinking about doing that going forward. But it was something that was considered all the way back when Taproot was being designed.
That's interesting. And the reason I ask is, we're just now beginning to see institutions moving into Bitcoin. And here's this quantum computing risk rearing its head. And so I think it's important for people, investors, institutional, retail, otherwise, to hear this, what you just said, which is, we have been thinking about the risks. That's what we do, to protect the Bitcoin blockchain. and I just hope I'm not overstating that too much.
No, I'll make one point, and I want to ask Odell to elaborate on this. I think open source just wins in this scenario. Adam mentioned Signal and a bunch of other tools that rely on this cryptography. And Bitcoin and a bunch of these other devs are just working out in the open to solve this. So there's a lot of shared learning. So I don't know if Odell, you have any things you want to expand on in terms of how the importance of open source in this context.
I mean, I think you nailed it. Obviously, the beauty of open source is it's not controlled by an individual or a company or a government, and innovation can happen in a permissionless and open way. And as a result, we see a lot of innovation happen in the open source ecosystem. And I would just say that I think there's just a lot of excitement and growth that is happening throughout open source software as a result of excitement around Bitcoin. Like Bitcoin kind of makes open source sexy again. So as a result, we're seeing a lot more people getting excited about it, and a lot of young people that are actually interested in contributing to open source projects.
Has the number of developers continued to increase at the same pace as it has historically, or has it accelerated here? Or do you have any metrics? And
I mean, it's hard to measure objectively because you can work on this stuff without permission. I would say the single biggest pain point, particularly in Bitcoin, is this kind of idea of like a replacement rate for very experienced developers. Like when you're talking about a system like Bitcoin, experience really helps with a system like this. You know, it's out in production, it's out in the wild, it's securing over $1 trillion, and that it's hard to replace someone who's worked on Bitcoin for 15 years at the protocol level. But I would say that where we're seeing a lot of enthusiasm, and so you need education, you need mentorship, you need all these different aspects that actually help people get into that kind of work. But I will say that on the fringes and the outsides, right, we're seeing a lot of young developers come in. I mean, with my work at OpenSat specifically, right now we've provided over 260 grants to developers around the world, 40 plus countries. They're all paid in Bitcoin. A lot of them are very young. A lot of them are doing open source work for the first time. So there's a lot of reasons to be optimistic, but I think it's important to not be complacent there, because it can be very hard work and it can be very thankless work, and there's not that much funding going around. There's more funding than there's ever been. But so we need to stay focused, and we need to just keep pushing it.
Yeah, and I know you and Rod and our team, we've certainly tried to encourage this. We are donating a percentage of our private crypto funds to the movement. So definitely want
It's
to
massive.
Echo what you said, Matt, and encourage others to do so as well, because this probably is the most important open source ecosystem out there.
For sure.
Yeah. So what I was going to add is that the different types of cryptography are more or less vulnerable to extremely high-powered future quantum computers. So the public key cryptography, like ECDSA, RSA, Schnorr signatures, and public key exchange things like SSL and signal messaging, are quite, you need a very powerful computer to get past the hurdle, but then they change the game, right? So then you eventually have a problem. But with symmetric key things like hash functions, actually all you have to do is double the key size. Like, if you've got a 256-bit hash, switch to a 512-bit one, and you're basically at the same point as you were before, because that, it reduces the quantum computers have an algorithm for doing that, but for attacking that, that kind of search space, but it still has a massive runtime. It's just the runtime is a square root. And so if you double the key size or the hash size, you're protected. And so, of course, you don't want, somebody having an unfair advantage. Like Bitcoin mining relies on like an even playing field where somebody with one miner has 10% of the luck of somebody with 10 miners. But I think that is still relatively easy to do with what we can foresee now about, the algorithms. I mean, possibly there's something indirect, some more research on the algorithm side of things. But as it stands at the moment, I think the understanding is that hash functions are fine. And actually, those are the hash functions we talked about, the old ones that are post-quantum secure, are hash-based. So their signatures constructed purely out of hash functions. Coincidentally, the person that invented that type of signature was Leslie Lamport, who's the same guy that wrote the Byzantine generals problem. So a very prolific computer science guy, and the same guy that coded LaTeX for the typesetting program. It's just like a busy guy.
I'll ask a clickbait question that I'm sure you're tired of hearing, but because Matt referred to 10-year-old addresses, and Adam's describing essentially a few minutes ago, how you can sign a new transaction using a new encryption scheme that's post-quantum secure or something along those lines. What do you do with coins that have been sitting for a very long time, like the Satoshi coins, which have a very relatively large number of Bitcoins in them? Is there an action to be taken or an action to be opted to not take?
It's the 1 million Bitcoin question, right? Yeah. I don't know. I mean, I think the best case is that we implement some quantum readiness in the next 5 to 10 years, let's say. And then hopefully there's a long period of time where people can start to upgrade. And hopefully the keys stored in those old keys upgrade. And if eventually they don't, and that probably will always be the case because some of them will be simply lost, right? Then at that point, the ecosystem will have to make a decision, which might be to, soft fork out that signature scheme, and everybody who could upgrade has had a decade or so to upgrade. And if they didn't, they just made a donation in like anti-diluting everybody else, right?
I think that's definitely a potential outcome. There is also some early, and I should emphasize early cryptographic research on how to do this in a way that isn't vulnerable to quantum computers. And so there's a few different ideas of how you could do this in a way that's not vulnerable to quantum computers. One, in a way that doesn't require key movement, right? So we're talking about there's various things we can do that as long as you do a transaction at some point between now and 2 decades in the future or whatever, at some point when quantum computers might be a real risk, you're fine. So that's pretty easy. The question is, what if somebody doesn't do a transaction? So there's a few ideas floating around. One is if you can come online and use the private key to join to prove without telling anyone, prove that you have the private key before a quantum computer becomes an issue. So, for example, if you did that today, you could go on open timestamps, for example. You could publish a hash of your private key.
You could introduce a new key and timestamp it without actually moving the coins. So it would be a way for somebody sort of to protect themselves from that eventuality without having to preemptively move the coins, which is they sort of timestamp introduction of a new, like a post-quantum address, publish it on open timestamps. Nobody can tell which coins they're talking about, but they're prepared, right? So then if those coins are later frozen, they say, but I have the key and I have a new key a post-quantum key that I authenticated 5 years ago, and therefore, you make some code changes to allow that to spend. And that's possible. But there will still be people who just straight lost the key, and there's nothing you can do about people who lost the key. They can't help themselves, right?
I mean, there's probably, like 2, 3, it's impossible to tell, and you kind of just make an estimate based on age. And that's not always correct. We've seen old addresses move, decade-old addresses move, that people thought were lost. But the estimate is probably in the 2 to 3 million Bitcoin range of lost Bitcoin. And so the question still remains that if at a time it becomes possible to spend that Bitcoin by someone with a quantum computer, there's a threat there, not necessarily for the network, but there's a threat there for Bitcoin markets and the purchasing power of Bitcoin. Someone could spook the market, dump a bunch of Bitcoin, and crash the price, which at that point could have really big global effects, because if Bitcoin is this global reserve currency, this base of this global financial system, you can imagine the type of chaos that would ensue there. And I think it's probably really way too early to talk about it today. And whenever it is talked about, it will be very controversial. But it probably will be something along the lines of, you give people an upgrade path that is very, very, very long, like on the magnitude of 10 years, like Adam was saying. And then you just say, anyone who hasn't done that upgrade path, like those Bitcoin just can't be spent. They're just like forever, basically. You can think of them as forever, quote unquote, locked or lost. And I think you'll probably just see stakeholders in the system, like that would probably be like the least controversial thing ever at that point. And that's when you actually see Bitcoin changes happen, because Bitcoin is this open network, because it's this open protocol, because no one controls it. It is incredibly hard to change by default. And that's a feature, not a bug. It's the core value prop that, is foundational to all the other value props that Bitcoin provides. Because if you can change it easily, you can change it for the worse. You can maliciously change it. So when do we see changes in Bitcoin? We see changes in Bitcoin when there's a critical mass of support or demand for something. And it's hard to measure that objectively, but when it happens, it happens. So you need this, like the rough consensus only really happens when there's pressure. So as you get closer and closer to this type of concern, that would be the only time that you'd really have the kind of market sentiment to make it happen.
So is this flurry of publicity around Willow and so forth, is it going to change what you do on a day-to-day basis in terms of, as core developers, in terms of getting ready for the future? Or I think I'm back to the last question I asked. You've been, you're on watch and you're looking at all of this, and there are ways to work around the challenges that quantum computing will bring. Is that right?
I think it's time to start doing something about some of this stuff. People have obviously been thinking about it for a while. It was something that was kind of planned all the way back when Taproot was designed, or at least it was a thing that was on people's radar back when Taproot was designed. And yeah, I mean, obviously it's not like we've seen a fundamental change in how likely quantum computers are in the scale of a decade. We still have a lot of time by any reasonable metric. But it does seem to me, this is my personal opinion, like we should probably start doing some of the work here to set up that really long time horizon that Odell was talking about, where, we need that long time horizon because it might be the case that the community of Bitcoin users at the time decide we're just going to seize these coins. We're going to freeze these coins forever and they're not going to be movable anymore. If you lost your private key, these coins are going to be frozen, which they were already frozen anyway. It's just now going to be formally so. And that's a conversation to be had in the Bitcoin community of a decade from now or 2 decades from now. It's not something we decide on today, but we should do the work today to set up the possibility that we could make that decision if we wanted to.
Odell, let me ask you this question, because I kind of agree. You need the urgency to kind of create this rough consensus. Do you feel like in 2017 during the block size war, there's like pretty centralized places like, Twitter and other places to kind of chat and talk out in the open. But now, Matt Corallo, you published on Google Groups, there's Delving Bitcoin, there's obviously Nostr, there's X, there's all these different, Blue Sky even, whatever, but seriously, there's all these other platforms. Do you feel like there's an issue in terms of being able to generally talk amongst each other to get to that rough consensus perspective?
No, I mean, look, the Bitcoin stakeholder community is larger than it's ever been before. And I think it's important that we don't have conversations centralized in specific areas, right? Because that does cause a central point of failure. And so it's good that we have many different avenues for discussion. We also have way more, in-person events than we've ever had in the history of Bitcoin, like orders of magnitude, right? And a lot of good, productive conversation happens offline and in person and looking straight in the eye of someone else instead of like rage baiting on X, or trying to just dunk on the person you're responding to for additional engagement. I think the important lesson to learn by the way on 2017 was there was a false sense of urgency trying to be created by the people who wanted the change. And it's a perfect example that you can't fake the urgency. You can try, a lot of people that want to change Bitcoin try to fake the urgency, but it needs to actually be organic and rooted in real demand, like real demand for a specific change or quote unquote upgrade. And in 2017, that just clearly wasn't there. And that's why you saw a small minority do a hard fork. And when you have a hard fork, the history of the two chains is the same, but going forward, they are different. So if you have Bitcoin at the time of a hard fork, you end up having two sets of Bitcoin. One is the change and one is not. That hard fork was Bitcoin Cash. And it's basically, it'll never go completely to zero because these things just tend to survive for a long period of time. But it's practically gone to zero in terms of Bitcoin, in terms of dollars, while Bitcoin is now being adopted by people all around the world. So there was clearly very little real demand for it. But at the time, the proponents were saying there was a lot of urgency, there was a lot of demand, we had to upgrade, we had to do it now, everyone wants this. And we even saw a bunch of companies come together to try and push forward change. And it didn't happen. So there's a rubric in my head, because time is very scarce. There's a rubric in my head that it's, people tend to get into these holes where it is important for us to be thinking about this stuff way ahead of time. But you got to be careful on the other side that you're not dedicating a bunch of time and a bunch of resources and a bunch of mental cycles to something that is not actually in demand right now or needed right now.
Yeah, that's fair. That's a good maybe jumping off point in terms of like looking back on this year and then looking ahead as well. Because I think quantum is an interesting topic, but there's so many different topics as well to kind of to touch on. I don't know if from this group, like what was one of the biggest things in 2024 that working in the Bitcoin space that you're like, wow, this was a big move for us. This was a big accomplishment. And then looking ahead to 2025, maybe thinking about something that you're looking forward to.
I'm just going to take this not as an opportunity to toot my own horn and chill my bags. So things that I did this year that I was very proud of. But I think will be big for Bitcoin. So I launched this early initiative called there's not a great name. We need a better name for it, but Bit 353. Which if you've used Lightning address, so a lot of Bitcoiners have used Lightning addresses. There's a really great UX. You send money to something that looks like an email address, right? Username at domain. You send money to it. It has a lot of issues, but it's a great user experience. People love it, right? So I did a bunch of work to design a newer version of this that works both on-chain as well as in Lightning. It works for hardware wallets, so hardware wallets can verify it. If you've ever used a Bitcoin hardware wallet, it asks you, hey, do you want to send money to this random string of characters that you can't possibly verify? So now a hardware wallet can actually give you something human readable that you can verify. So it's going to improve the security of hardware wallets substantially. And it's going to improve user experience of on-chain payments, of Lightning payments, privacy improvements of Lightning payments over Lightning address. So I'm really excited for that. It's super early. We're still just starting to get it into wallets today, but there's a lot of excitement for it. So I'm really excited about that. Also, more broadly, this year and maybe also next year, so maybe to answer both sides of your question at once, Lightning is solving a lot of really big issues that are challenges for people just using it, just usability things. So even not fundamental stuff like Lightning, like a lot of stuff you see follows this trajectory of you build all this fundamental work and then you have something that's not really usable. You did all the hard work, but the thing you built has really bad UX because you were focused on all the hard problems and not the problems that you could solve, but just require more thinking and a little more work.
And so Lightning is spending a lot of cycles over the last year or two, and certainly coming into the next year, to address all of that long tail user experience challenges. And so I'm really excited to see that continue and to hopefully see a bit of a retrend towards non-custodial Lightning, because there's been a trend away from non-custodial Lightning because of those user experience challenges, and also, in my view, an overhyped fear of users paying fees, like that users won't possibly pay fees, and we should not build anything that requires on-chain fees for non-custodial users because it's just too expensive. And I think Lightning suffered from that a lot, but didn't deserve it. And so a lot of the user experience challenges are getting better. And so seeing people transition from on-chain wallets where they already pay those fees to non-custodial Lightning wallets is something that I really want to see more of coming into the next year as we solve those usability challenges.
I'm glad to see Lightning's not dead. But yeah, Adam.
Right. Like another thing I thought staying on user interface that is positive development is the silent payment. So people have been talking about stealth addresses for a few years now, and they weren't ideal because they sort of involve like set up transactions and op returns and things. And it turns out that the Taproot Schnorr addresses are public keys, and so some things with a bit of thought became simpler. So the silent payment makes use of that. And a nice thing is that from a user's perspective, you have a single address with which you can send to somebody, and you don't have to change it. And yet it has the benefits of not reusing addresses because the new one is used in practice. So I think that's nice. I think it does probably imply some like indexing or scanning for a full node and more use of full nodes, but it's probably not a bad thing. Too many people relying on index servers anyway. And so it's like finally somebody found a way to, by keep pushing on that problem and using some newer tech that is in Taproot and Schnorr now, to find a reusable address format that doesn't like correlate all your payments, right? Which is nice. I think that's partly why people reuse addresses, because they're new to Bitcoin and they think it's an account number, and it's not. And so it's like a constant source of confusion and pressure. And then of course all the exchanges and everybody gives you a single address to deposit to. A few of them make a like BTC, Bitsy. They give you a new address every time you deposit, but most of them don't, right? So that's nice. And also on the Lightning side, so this kind of organic development with Bolt's exchange starting to swap liquid Bitcoin on like liquid sidechain kind of tech for Lightning balances. So they have a submarine swap for Bitcoin. And during the JPEG floods a while back, the fees got up and made that difficult to use. And so they did a kind of couple of week hackathon and implemented liquid swaps. And that's like a little faster, a little cheaper. And so actually, after the fees subsided, it became by the far the biggest ongoing swap volume. And what happened from there, because this is a trustless swap, is now a number of wallets have started a trend of making a liquid wallet that looks like a Lightning wallet, but doesn't actually have its own channels. So it's using channels managed by bolts. And so you get the kind of usability benefits of the wallet Satoshi, like the full custodial, except it's non-custodial. But of course, your security trade-off is different because now you're relying, your wallet is actually keeping its balance in liquid Bitcoin, which is a different trade-off again. But, as Lightning is a hot wallet, it's maybe not a bad trade-off. And it also doesn't really need an LSP because you don't have a channel, so you don't need to pay somebody to send you capacity or figure out how to recoup the cost of renting capacity. And actually, Breeze, who does, integration APIs, added both options, right? They already had the node option, and so they added, they call it nodeless. So nodeless Breeze Lightning is actually a liquid wallet, basically. So not what anybody expected, but the market innovates in kind of meandering ways, like picking up on some API that got used. And now, at Blockstream, we actually have a kind of green light, a sort of non-custodial Lightning API that makes some privacy trade-offs, and of course Liquid, which is used by Bolt. So those two things are competing against each other in the market. So I guess we get some users one way or the other, and we'll see what happens. But it has provided, another little increment in Lightning, kind of making it easier to use. I think the other thing that could evolve, because as we get into another bull market, the main thing that drives fees is traders being indiscriminate about fees when they're trading rapidly. That there is LOL, like Lightning on top of Liquid. So Greenlight is looking to do that, and I think Breeze announced interest in doing that. So once you have a Liquid wallet, Liquid's still a blockchain, and blockchains don't scale. Same problem, right? But you can do Liquid on top of it, and so you can let people maybe clog up the Liquid network for low value Lightning payments instead of the Bitcoin network, and it gets a bit of extra capacity with different trade-offs. So, of course, looking forward, there are lots of different new layer twos like Arc, which are Lightning-like as well, right?
It's so interesting. I remember meeting both Matt Corallo and Adam in 2019 at a little confab, and I remember Lightning was there. Or there were people representing Lightning there, and it seemed that from that time on, the interest almost fell off. So this is new to me. This is very interesting. And so does this suggest that, many people in the investment world associate Bitcoin with a store of value. This means of exchange role of money is evolving here, or am I overstating what you just said?
I think it's the use case that becomes important in different geographies is different. So I think the emerging markets are originating most of the transactions, and in the developed countries, they originate most of the savings. And so I do think that they are both fundamental to the value proposition in a sense that, one of the reasons people are investing in digital gold is that it's also electronic cash for the internet. And it was easy for us to lose track of the fact that, there are billions of people who were unbanked and unable to access the global markets who now can. So I think that is, very exciting part of the value proposition as well.
To some extent, I think to answer your question in a different way too, I think there's a lot of interest on the development side of Bitcoin to build tooling that would better enable these use cases. Just like Adam was referencing, a lot of people, or a handful of people now doing liquid wallets that do Lightning integration. So now that Lightning exists and is integrated in the big players, so in Binance, in Coinbase, in Cash App, and all these players, then developers are now saying, okay, how do we build the best wallet we can for a lot of these people who we think have a lot of desire to use Bitcoin, who are using Binance today, who are using, literally doing custodial Bitcoin wallets, using Binance as a Bitcoin wallet today. And so now there's a lot of interest in building various tools that try to explore the transition point between custodial and non-custodial. So how do we build something that's somewhere in between, that has the best security model we can, but the best usability model we can? And there's just a lot of ideas and things being built in that domain. And so as that tooling continues to improve, and now that these things are starting to exist, that then also unlocks a lot of people using Bitcoin more directly, because they might not trust Binance, but maybe they would trust this app that has a better security model. And only in the last year or two have there been a lot of other options that hopefully, will unlock these things and will enable a lot more people to use Bitcoin.
I would just add here, this year, I've found it really fascinating, the growth of Nostr, which is this open protocol for communication and speech. But from the Bitcoin lens, what's really fascinating about it is it has Bitcoin integrated, and so it has Lightning integrated. And when you're making these Lightning payments, they actually come with a social context. So, you're sending Lightning payments to people's social posts. You can imagine a Twitter-like experience where you're able to directly send someone Lightning payments and everyone can see it. And as a result, there's more and more people using Lightning on a daily basis just in that aspect alone. I've also been closely watching the Cashew project, which is this charming eCash project that gives you very good usability, very cheap fees, very strong privacy, with the trade-off that it's custodial. But a lot of people are choosing custodial solutions already, so let's make custodians better. And the main benefit there is it requires zero protocol change in Bitcoin. So to our earlier conversation about how difficult it is to change Bitcoin at the protocol level, watching these two projects that don't require any protocol change whatsoever result in more and more people using Bitcoin. That's extremely positive. And then last but not least, just to bring us back to actual real hard numbers, if you look on chain right now, there are only 4.5 million Bitcoin addresses that have over 10 million sats in them, that have over $10,000 in them. And you can use this as an upper bound for self-custody in Bitcoin. So there are not more than 4.5 million people in the world that are self-custody holding more than $10,000 worth of Bitcoin right now. And most people are using multiple addresses. So that number is actually significantly lower. So you can estimate probably there are like 2 million-ish people in the world that are using self-custody Bitcoin and holding more than $10,000. And so we really need to get that number up. I mean, there's been a lot of positive aspects in terms of, ETFs driving demand for Bitcoin and exposing it to more and more people. But obviously that is custodial. So how do we increase self-custody? I think one of the single biggest non-protocol developments on the outside was actually the BitKey hardware wallet from Block, because this hardware wallet is the first time that someone like my dad or someone that's completely non-technical can actually use self-custody Bitcoin in a relatively secure and easy way. It's very straightforward. Now, more technical people have some concerns about trade-offs with regards to privacy and the security guarantees, but the accessibility that it allows for people to actually use self-custody Bitcoin. And for this audience specifically, I would say pretty much anyone who's listening to this and is not holding self-custody Bitcoin can go and buy a BitKey, and they don't have to read a guide, they don't have to watch a YouTube video, they can actually just self-custody Bitcoin for the first time. And then the second piece there is understanding the realities on the ground. So if we are estimating that there's about 2 million self-custody Bitcoiners right now, on the flip side, Tether is supposedly onboarding 50 million people plus to Tether on Tron every quarter. And so what I like to see is more and more wallets understanding that dynamic, that many people in the developing world that don't have access to dollars are using Tether on Tron and having actually really good, strong Bitcoin wallets that work really well with Bitcoin, but also are cross-compatible with Tether on Tron. One of those wallets is still very early, and it has some reliability issues and stability issues, but it also links back to Adam's earlier point about it's called Aqua Wallet and uses Liquid to hold everything at rest, hold your funds at rest. It interacts with Lightning and it interacts with Tether on Tron. Also recently, Strike added Tether on Tron support for their non-US markets. So someone that has Tether on Tron can just easily onboard to Strike or offboard from Strike, right? They can go either way between Bitcoin and Tether on Tron. So I think there's been like a little bit of this ideological purity, which I respect, and is one of the best parts about Bitcoin, which is that Tron is incredibly centralized and Tether is incredibly centralized, and there's a lot of centralization risk as a result of that. But there needs to be some pragmatic understanding here that if a bunch of people are using it, then we need to be able to interact with that ecosystem in a good way and be able to onboard more and more people to self-custody Bitcoin.
Yeah. I mean, I think the emerging markets really seem to care about access to US dollars, and Tether is
100%.
the market leader, right? And I think one of the interesting things with Tether is it's, the blockchain is just a transport to move, a somewhat centralized thing, right? So people are actually not at all attached to the blockchain, and it changes every year or so as one blockchain gets full of cat pictures and then they move to the next one and stuff. With Aqua, they are, as you said, converting it to Tether on Liquid, and they have some kind of API they call them to swap from the popular networks, current popular networks for Tether. So I think the hope there is that once you have more Aqua users and users of this kind of model, because any Lightning wallet that's built that way, as a side effect of using Liquid, has the ability to store Tether, which normally a Bitcoin wallet doesn't, right? And that, they would then, it would stay in Liquid, right? If both users were using it. And that's actually the case with the Lightning. So if you get two Aqua or Peach or Breeze-based wallets, nodeless wallets, that try to do a bolt swap to do Lightning, they've got some hints in there, and they'll detect that, we can just send it on Liquid, because otherwise you just get the Liquid fees and then the Lightning fees on top. So they just save a little bit of money by shortcutting it. So you get this kind of effect. As you get a bit more network effect, things stay on that side.
So I kind of want to go down this rabbit hole of stable coins and so on and get people's opinions, but I think I'm going to save that for another brainstorm. I think we're extremely bullish on what's to come in 2025. I don't know, Frank, if you're looking back on 2024 as well as Cathie, and then look ahead. I'd love your thoughts as well.
Yeah, sure. I mean, one that was in my head that wasn't necessarily a surprise. It was kind of predictable, but was I think a milestone. Nonetheless, and from the investor perspective, to add, we did some research led by Yassine Almandra several years ago now of really the institutional case for Bitcoin and what a traditional investor might allocate of their total portfolio to Bitcoin. And the result was, depending on risk tolerance, somewhere in the single digit range of your portfolio. And now, just a couple weeks ago, you have BlackRock, the issuer of the largest Bitcoin ETF, saying, we think 1% to 2% is reasonable. And that was just a moment where I sat and was like, I'm really proud of Yassine and the work that he led on the shoulders of all of you guys being way ahead of the curve on this. And now kind of seeing the rest of the world catch up at scale was just a moment of just, wow. Seemed like it was going to happen as soon as they were marketing their own Bitcoin ETF. But people are, there's a new class of people listening.
Totally.
I do feel like that number has gone from 1% to 2% too. I feel like it was always, everyone was talking about 1% and now it's 2%.
Sorry, right. And we put in our big ideas, the institutional opportunity by 2030. Our range was bear case 1%, and bull case 6.5%. And Frank, the middle part, what one was that? 4 or 5%. So we're on track. We've been, we wrote our first paper, Bitcoin, ringing the bell for a new asset class in 2016. So we've been waiting for this moment. And it couldn't have happened without all of you, obviously. And I think the Bitcoin Brainstorm that we're doing has been also very important for a lot of people who really do want to understand what they own. And so when a controversy comes up like quantum, we want to tackle it, and we want to convey that you're on it, because obviously we can't do anything about it, but knowing that you have been thinking about it for years, that you might do something about it, is interesting. And for me, the most enlightening moment of this call is lightning, coming to life, which I love. We've been waiting for that for a long time. So very, very happy to hear that.
Absolutely. And this may be a good way to wrap. I think in 21 days, Cathie and Frank, you guys celebrate your 1-year anniversary of launching the ARK-B ETF. So massive congrats to you guys for that. I think it would be pretty cool with, I don't know how many days until the new administration takes over, but I'd be interested to see if Elon and Vivek and those folks can kind of tackle with this whole Doge thing going on, with what Hester Peirce alluded to, with potentially in-kind redemptions on the ETF side. Like, there's a number of things that we could be very cautiously optimistic leading into 2025. So the best is yet to come, in my opinion.
We agree. Couldn't agree more. Yes.
Well, thank you everybody for joining us on this brainstorm, and we look forward to having you guys back.
ARC believes that the information presented is accurate and was obtained from sources that ARC believes to be reliable. However, ARC does not guarantee the accuracy or completeness of any information, and such information may be subject to change without notice from ARC. Historical results are not indications of future results. Certain of the statements contained in this podcast may be statements of future expectations and other forward-looking statements that are based on ARC's current views and assumptions, and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statements.